it doesn't take a lot of capital to create a high market cap. And that's why Richard Hart put out the narrative that market caps are not a real thing. They are a real thing. I disagree with them. They are completely real in the traditional system of stocks and equities.
Right.
But in crypto, it's just a whole different game. And so in crypto, yes, you could argue that the market caps have less meaning. They have meaning. It's just Hex is a very unique project because there's just it's just an unnormal.
I semi agree with you. Because you are market caps aren't total bullshit, and I'm agreeing with that. But it's more of like, I think when most people are talking about, when they talk about market caps, they're more talking about liquidity, really, at the end of the day, versus because you can't sell market cap. You can only sell like your coins versus like how much liquidity is in there without wicking the price against yourself, right? And it's a sort of thing of like, what, like, if enough people sell, the price is going to collapse on any asset, right? If every shareholder of Apple sold their Apple stock right now, Apple would go to fucking nothing.
Of course, but Apple has like so yeah, market cap. So it's yeah. I mean,
you're more talking about liquidity versus the market cap.
There's like yeah. I mean, there's like three different things, right? You have market cap, then you have volume, right? Or you have like the cycle velocity of money, right? You have the cycling of capital, which allows liquidity. So you have velocity of money / liquidity / volume. That's one aspect. The third aspect is realized cap, which is essentially, what was the value of those coins last time they were moved, and if you add that up together, you can create a market cap. So the thing about Bitcoin is its realized cap is 50% of its market cap, roughly speaking. And so you have just as simple numbers. Bitcoin's $1 trillion asset. Say you have $500 billion of money that's been moved at those prices. So that is
moved, sold, or just like moved from wallet to wallet.
Well, most of the time when they move from wallet to wallet, it's pretty much guaranteed it's for some sort of a sale. I mean, it's not always the case. It's definitely not always the case. But with Glassnode, they can determine. There's wallet management of exchanges and stuff, and all this stuff. They can actually use algorithms to take that out of the equation. So, like, I would say, just as a number, like 90% of the time or more, when coins are moved, they are being sold. So it's pretty accurate. But the thing about the realized cap is you have $500 billion of value that's already been exchanged. So it's the market cap of Bitcoin is real. It is real. It's a legitimate $1 trillion asset market cap, because you've already had $500 billion of realized profits taken out of that network. Right, you have to look at how much.
But that's exchange. Is it so? I think what you're talking about is like transactions and stuff, because
I'm talking about realized profits. So like if
realized profits into cash. So you think
yeah. I know it for a fact. If you look at the realized cap of Bitcoin, you can actually see how much profits have been taken since the beginning of Bitcoin. Bitcoin has generated $500 billion of realized value and transfers, meaning, in order for that to occur, you have to have $500 billion leave the network and $500 billion come into the network.
Yeah.
So all of these projects, you don't have that amount. You don't have that amount of capital that's left the network. It's in the network. It's technically sitting there, and you could say, and that's why the market cap, he'll say, on a lot of these altcoins, the market cap is 100% fake, because you haven't had an actual realization of that capital. In theory. It's in there and it's valued at a certain point, but it's only valued there if you only get that money if someone will buy it from you on the way out and the coin doesn't crash. So again, it comes down to liquidity, it comes down to volume, and it comes down to velocity of money. And this isn't a bash against Hex, because Hex,
no, of course, no, and I know that because like the way Hex is set up is it's on purpose low liquidity. On purpose,
but it has decent volume. I mean, if Hex is doing $10 million a day in volume, given the fact that most of the coins are locked up long term, that's not horrible. And also given the fact, remember, the market cap of Hex, 85% of that market, so the market cap of Hex, only 15% of that is with the community, and 85% is with Richard or with the OA or whatever.
With the OA, more or less, yeah.
With the OA, whatever you want to call it, right? So. But Richard's long term. He's a long term investor. He's realizing he's going to realize his gains, but he's going to do it in a way that's not going to hurt the project. He's invested. He wants to see Hex succeed. I don't doubt it. And so I just don't see him dumping on the community. I don't. I think he's smart enough to figure out ways to generate capital from his coins without having to sell them on the community and hurt the price. Regardless, that's speculation. But I would just say that it's just market cap is something that in certain situations it's kind of propped up and fake.
I'll say on 95%, 95+% of market cap is kind of shit.
Most projects, it's not legit market cap. I mean, there's only a few that
it's all about like what we're talking about here, because like you're right, like Bitcoin's the most liquid coin in the world. Of course it is.
Its market cap is legit. Bitcoin's legit.
Yeah, it's market cap. Yeah, no, I would say it's
with Ethereum. It's legitimate market cap. Yeah,
but that legitimateness is also it's a double-edged sword, because the more and more liquid you are, it becomes it ends up getting that problem of the problem with large numbers, right? Like if over a long period of time, over 10 years, like I mean, for sure, Bitcoin's going to hit $1 million. For sure, $1 million, right? But if I take the current price of Bitcoin right now, right? Like, all right, let's take $1 million, right? I mean, it's basically 20x, but I just want to be a little more like exact with it, right? Divide $1 million by $47,193, and it's basically 21.1x. Basically, it will hit that over sometime within the next 10 years. For sure, this decade. It will hit $1 million this decade. For sure. For fucking sure. But over that same decade, if I take the same capital and I love Bitcoin. Legitimately, like if it's one of the places where, like, just in case Miguel is retarded, you put a couple BTCs, some Ethereum, some Hex in there, put that away on a Trezor or a Ledger, break glass in case Miguel retarded. You can restart yourself again, right? Like these are, like, I would consider those three like sort of like the doomsday assets, right? Of like, these are the backbones of like I need to restart the whole thing or something like that. It's like BTC, ETH, Hex for myself personally. For some people, it might just be Bitcoin Hex or Bitcoin Ethereum. I'm sorry, or some USDC or whatever the hell it is. But it's like I find it pretty foolish if people don't have BTC and Ethereum as I'm gonna put this away, and I know in a couple of years it's gonna be still worth something, and I'll be able to trade myself back or like invest myself back into relevancy in the space in terms of like a whale status. Because if you have a couple Bitcoin and 32 ETH and stuff like that, there's no way in hell that you can't, through a cycle low, take that, invest that into solid projects during that new cycle, and then get yourself into a really strong category again in the portfolio. That's why they're amazing. But Bitcoin suffers from like success, which is like, as you increase your liquidity, it takes more and more money to pump the price up, right? It takes a really large amount of money, and it's the law of big numbers. Ethereum I would say it's 43% of the market cap of BTC. I would say Ethereum's very liquid as well. It's extremely liquid, not as much as Bitcoin, but it takes much less money to pump Ethereum. And it's that sort of thing as you keep going down. And then some coins are like something like a Binance chain coin, like.
I agree with you, DC, but it's kind of a double-edged sword. I do feel like there's two sides to that coin, because I would say it's true. Yeah, you do need more capital to push up the larger market cap coins. 100%. There's no doubt about it. But I would also say that they're really large money. Not necessarily retail. We're going to see a real split off, I think, in the next cycle with retail investing in Bitcoin, Ethereum versus large capital and large players. Because people will start to do the math and be like, there's just not the returns left on Bitcoin for these retail guys that want life-changing money. But whereas the guys that already have life-changing money, that just want to keep the life-changing money and just want to put like 1 or 5% of their assets in a Bitcoin or Ethereum, it's a great investment for them, because they look at it as like uncorrelated to their other assets. So we're going to see, I mean, large capital likes big market cap investments because they're more liquid. Bitcoin's great as far as liquidity compared to where a lot of these wealthy people can put their money. I mean, they put it into real estate, they put it into gold, they put it into these other things. It's hard to get their money in and out. Like Bitcoin is kind of perfect in that way for them, as far as once it becomes over $1 trillion market cap again, and once it gets to multi-trillion dollars, it becomes more, in my opinion, actually more appealing to these large institutions.
No, of course, yeah.
But for retail, it becomes less appealing. So it's like it's going.
It's more of it's a piggy bank. It's I'm a store like a tenth of a BTC or in a Bitcoin just in, just as it's an insurance, like the way I treat it is a gold or an insurance plan. It's like that's the way